All right, so our next topic that I'm going to cover is some ideas around mortgage lending. Now, there's a couple things here that shockingly some people don't really quite know about. One in particular, the first one that I'm going to talk about, is the concept of buying the rate down. Now, you see this happen a lot more in the United States. It's become definitely a much more interesting topic in Canada. And so what that essentially means is, let's just say right now, I believe the 5-year fixed rate mortgage at most major institutions, so call it like the chartered banks, you're looking at anywhere from about 5 to about 5.2% for 5-year fixed rate mortgage. So when you buy the rate down, what you can actually do is you can pay to be able to offer a lower rate to new home buyers. So some of the things that you require for that to happen, obviously you have to find a lender that will do it. They will require things like the name of the builder, name of the project, location of the project, number of units, so how many homes are in that neighborhood that are being built out, price range of all the units, expected closing date of the units. It's probably more so timeline of building the units, what it looks like, as well as what rate do you want to buy it down to. Now, I'm sure that there are some requirements in there. I mean, obviously you can't buy the rate down to, probably a ridiculously low level, but buying the rate down I think would be very smart, because at the end of the day, most people when they're buying a home, it's not necessarily the sticker price that they look at. It actually really does come down to what is their payment monthly. So if you do have any questions around buying the rate down, or you're looking for a recommendation of a lender that does participate in this, please reach out. You can shoot me an email, give me a phone call, text, whatever works for you. So as an example, on our team, we actually have the ability to connect some of our home buyers with a lender that can offer them a 5-year fixed rate mortgage as low as 4.39% right now, and that's at the time of this recording. That can always change, but and that is also for a high ratio mortgage, so an insured mortgage. So that's one thing we do for our clients. The other thing that I want to touch on related to mortgage lending is price your home for affordability. Now, that maybe sounds a little weird, but most people don't really dig into the nitty-gritty of mortgage lending and what it really looks like in Canada. A lot of the times all you hear is, oh yeah, the minimum down payment is 5%. Well, that's yes, but that's also wrong. And where that's wrong is the second you cross $500,000. Now, for new construction homes, I don't think you can find anything for $500,000, so your minimum down payment is no longer 5%. So to break this down, if someone purchases a home between 0 and 500,000, minimum down payment is 5%. For every dollar above 500,000, the down payment requirement is actually 10%. So it increases, and that goes 10% up until you hit $999,999. And once you cross to $1 million, it's actually a mandatory 20% down. But the other interesting thing is when you go 20% down, you can't get an insured mortgage. And right now in Canada, when you don't get an insured mortgage, your rate's actually higher than if it was a high ratio mortgage with insurance. So it's not a crazy amount, but to give you an idea, you're talking about a minimum of about 20 basis points or 0.2%. So on $1 million, that's $100 a month. Now again, if you're buying $1 million home, maybe $100 a month doesn't mean a whole lot. However, the reality of it is it could. And to put it in context of down payment requirements, if you have a home that, let's say you're listing at $1,050,000, I don't know, your down payment requirements for someone purchasing that is 20%, so a little bit over $200,000. However, if you can build that home maybe slightly smaller, call it 1 or 2% smaller, or remove a couple features and get that price point down to $999,999, the minimum required down payment is actually $75,000. So by literally changing $1, going from $999,000 to $1 million, the down payment requirement changes from $75,000 to $200,000, which is a difference of $125,000. Everybody can do math. It's quite significant. But the other side is you also get higher rates. So it's a very interesting topic, and I think up until really now, when we've seen the market slow, is when we've really started to discuss all the real nuances and the nitty gritty, of mortgage lending. So hopefully you found some value in this. Again, stay tuned for our next video, or the link will be down below, and you could just jump ahead and watch it. Otherwise, we'll email it off to you in a couple days.